Hey everyone, welcome back to Corporate Decoder, where we unlock the secrets hidden within the world's most powerful companies. And today we are diving deep into the Cascade Private Capital Fund's latest report. And let me tell you, this one is packed with more hidden gems than a pirate's treasure map. So buckle up, because we are about to decode what this company is really up to. And if you appreciate getting straight to the point insights from these complex financial documents, make sure you are subscribed. We also have a fantastic community on Discord linked in the description below, where we break down these filings even further. Alright, let's get right into it. What is Cascade Private Capital Fund? Well, this filing is a certified shareholder report, basically a deep dive into their financial performance for the period ending the 30th of September 2025. They are a registered investment company, and their goal is to grow your money by investing in private markets. Think of them as a fund that pools your cash with other investors to buy into big private deals that you and I usually can't access. Let us peek at the letter to shareholders. Here we see a real testament to their investment strategy. They are proud that their performance aligns with their initial thesis, that private markets can offer better returns and less risk compared to just public stocks. And get this, since they started on the 7th of January 2022, they have seen an annualized return of 21.44%. Compare that to the S&P 500, which only managed 11.61% in the same period. What is even more impressive is that Cascade's investment risk, their volatility if you will, was much lower than the S&P 500. This is the kind of performance that makes investors sit up and take notice. Now for the main event, the schedule of investments. This is a big list of where Cascade is putting its money. As of the 30th of September 2025, they have a whopping $4.4 billion in investments broken down in several ways. A massive chunk, almost 44% of their assets, is tied up in secondary fund investments. This means they are buying into existing private equity funds, not from the start, but from investors who want to sell their stake early. Then they have primary fund investments, representing about 28% of their assets, where they invest in funds from their inception. They also have equity co-investments at over 20%. This is where they invest directly into companies alongside a main fund manager, and a smaller slice in credit co-investments and registered funds like money market funds for short-term cash management. It is worth noting that they have a significant amount, $3.7 billion or 88.6% of their net assets in restricted securities. This means these investments are not easy to sell quickly, which aligns with their nature as private market investments. Looking at their assets and liabilities as of the 30th of September 2025, we see total assets of over $4.6 billion. Their investment in unaffiliated securities alone is worth over $4.3 billion. On the liability side, they have a secured revolving credit facility for $300 million, which is essentially a loan they can draw from. This leverage is a double-edged sword. It can boost returns, but also magnifies losses. It is a calculated risk they are taking. This statement shows how much money they made and spent. For the 6 months ending the 30th of September 2025, they brought in over $69 million in investment income from things like distributions from private funds and interest. Their expenses were around $41 million, but a significant portion of that, about $14 million, was investment management fees, waived by the manager. This effectively reduced their net expenses, which is great for investors. This table shows how the fund's net assets grew. From operations alone, they saw an increase of over $432 million in the first half of 2025. They also had proceeds from shares sold of over $1.2 billion. All this resulted in a substantial increase in total net assets. The statement of cash flows tells us where the money is actually moving. Operating activities used over $1.2 billion, primarily due to investments purchased, which is expected in a fund that is actively deploying capital. Financing activities provided over $1.2 billion, mainly from new share sales and drawing on their credit facility. These numbers are key for investors looking at per S-share performance. For the 6 months ended the 30th of September 2025, the net asset value per S-share grew to $20. This represents a total return of 13.30% for that period alone. Looking back over the years, they have consistently delivered positive total returns. Their expense ratios are also worth noting. Even after expenses and fee waivers, they aim to keep costs manageable for investors. Now, for a critical look at the risks, they mention being a non-diversified fund. This means they can put a lot of money into one investment. While this can lead to big gains if that company does well, it also means a big loss if that one company falters. They also highlight the risk of investing in investment funds, meaning they pay fees on top of the fees charged by the funds they invest in, which can eat into returns. And of course, limited liquidity is a big one. Buying into this fund means your money is locked up for a while. You can't just sell it on a stock exchange whenever you want. They do offer semi-annual repurchase offers, but there is no guarantee you can sell all you want when you want. This is a trade-off for potentially higher returns. The notes are where the real details live. They explain their accounting policies, including how they value investments that don't have a ready market price, which is common in private equity. They use net asset value from the investment companies as a practical way to value these hard-to-price assets. This approach is standard in the industry, but it relies on the integrity of the data provided by those underlying managers. They break down their investments based on how their value is determined. Level 1 is based on quoted prices in active markets. Level 2 uses observable market data, and Level 3 relies on unobservable inputs, meaning estimations and models. A significant portion of their assets, about $243 million, fall into Level 3. This is where the most judgment is required in valuing these investments. This section is a massive table detailing each private investment. For each one, it lists its category like middle market buyout or venture capital, its cost, fair value, unfunded commitments, and importantly, the fund term. These terms can stretch out for 10 years or more, sometimes with extensions, reinforcing that long-term nature of these investments. And finally, like most financial institutions, they have a privacy notice explaining how they handle your personal information. It states they collect information like your social security number and account balances. And while they can share some of this for everyday business purposes, they do not share for marketing purposes with third parties. So what is the story here? Cascade Private Capital Fund is playing the long game in private markets, and so far the results are impressive with strong returns and lower volatility than the public markets. They leverage a sophisticated strategy of investing in various private funds and directly into companies. However, the inherent risks of private markets like limited liquidity and reliance on valuations of hard-to-price assets are very present. The non-diversified nature means concentration risk is also a factor. The use of leverage needs careful watching, but seems well managed given the asset coverage. It is clear this fund is for investors who understand and can tolerate the long-term illiquidity in exchange for potentially higher rewards. That is our decode of the Cascade Private Capital Fund's latest report. What is your take on these numbers, and what do they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.